CoreLogic reported that home prices rose a very strong 1.1% in April, following a 1.2% rise in March, showing that home price appreciation is very strong. Year over year, home prices are now up 5.3%, which is unchanged from the previous report. CoreLogic forecasts that in May, home prices will rise 0.8% and anticipate that home prices will rise 3.4% over the next year. Now, Black Knight reported that home prices rose 0.3% on a seasonally adjusted basis and 0.9% on a non-adjusted basis in March. Home prices are now up 5.1% year over year. Despite jumps in active inventory for sales in most regional markets and home price declines in some markets, Goldman Sachs analysts on Monday reaffirmed their positive multi-year outlook for national home prices: 3.8% in 2024, 4.4% in 2025, 4.9% in 2026, and 4.9% in 2027. Over the past few weeks, we've seen a solid increase in inventory, which is good for buyers, more options. But in most parts of the country, we are still way below pre-pandemic levels. For example, Illinois is down 69% from May of 2019. This will support home prices due to the supply and demand equilibrium. As for mortgages and inflation, personal consumption expenditure showed that headline or all-in inflation rose 0.3% for the month, which was in line with estimates. Year-over-year inflation remained stable at 2.7%. The core rate, which strips out food and energy costs and is the main focus for the Fed, rose 0.2% last month, which was 1/10 beneath expectations. The bottom line, we are seeing very little inflation progress, but it's not heating up and moving higher. The mortgage bond market is liking this. The ADP employment report showed an increase of 152,000 jobs created in the private sector in May, which was fewer than expectations of 175,000. The previous month's figure was revised lower from 192 to 188,000. The April JOLTS report data showed that job openings continue to pull back. Job openings totaled a little over 8 million, which was much lower than the 8.3 million expected and the lowest level since February of 2021. Both reports are weaker than expected and exactly what we want to see when it comes to lower mortgage rates in the near future. Mortgage rates have come down about 0.25% over the past week due to some of this weaker than expected economic news. Hopefully this trend will continue going into Friday's big BLS jobs report for May. Call me if you have any questions or need anything. Have a great one.